A checking account is a service provided by banks, savings and loan, and credit unions. Checking accounts allow individuals and businesses to deposit money and withdraw funds from a federally protected account. The terms of the checking account may vary from bank to bank, but in general, a checking account holder can use personal checks in place of cash to pay debts. He or she can also use electronic debit cards or ATM cards to access individual accounts or make cash withdrawals and pay for goods and services. Almost every bank offers some form of checking account service for their customers. Some may require initial deposits before establishing a new account, along with proof of identification and an address. A typical checking account is managed through careful posting of deposits, which is money added to an account, and withdrawals, money paid out for goods and services. The account holder has a supply of official checks which contain all the essential routing and mailing information. When a check is filled out correctly, the recipient treats it the same as cash and completes the transaction. After this check has been deposited in the recipient's own bank account, a bank worker files the check electronically, and the check writer's bank receives the canceled check and the amount to be debited or withdrawn from the check writer's account. This process continues for every check written against an individual checking account. Each person with a checking account is responsible for keeping track of their available funds, even though the bank will routinely issue its own accounting statements. Checks must represent an actual amount of money contained in the checking account itself. If a check is written for an amount higher than the available balance, the check writer faces numerous fees and possible legal action. The recipient of the bad check can demand immediate cash payment for the original debt as well as a substantial fee for the return check. Most banks have several different methods that allow checking account customers to check their balances. Printed monthly statements of debits, which are withdrawals, and credits, which are deposits, are mailed to individual account holders. ATM machines offer an option to check the current balance, while online or phone-in accounts can provide real-time updates on which checks have been processed and which are still outstanding. This information can be compared with the entries recorded in a journal called a check register. As long as the account holder maintains accurate financial records, a checking account provides a safe and efficient way to pay bills and deposit money from payroll checks and other income sources. A savings account may pay more interest over time, but a checking account replaces the need for large amounts of cash to satisfy routine debts such as rent or mortgage payments, credit card bills, and utility bills.